Hi, this is Dave Ford, President and Founder of the Atlantic Gold and Silver Centre. Today is Thursday the 22nd of December 2016, and today in the last video of the year we're going to open up our charts and have a look at the fake rallies and fake sell-offs of 2016. So here we are in December 2016, and if we look back at the last year, we saw the lows for gold and silver were both in December last year, with silver around $14 US an ounce and gold around $10.50 an ounce. 2016 was a year of two halves. We had a strong rally for the first 6 months and then a strong sell-off for the second 6 months. Now, a lot of commentators at the time of the rally were saying it was a fake rally. But the strength of the price rises were astounding, and there was still strong demand in India, Russia and China, and in our stores as well. We saw continued physical buying all the way through that period. So was it a fake rally? Yes and no is probably the answer. But what we can definitely see, looking at the sell-off that happened since July, was that it was a fake sell-off. Let's have a look at the charts and see what I mean. Okay, so here we are at our own website. Let's go and have a look at the live charts. A second to come up. Right, we've got a spot silver here. I'm going to maximize the screen. Now what we can see is this is the spot price of silver. Going back to the start of the year, we had silver at a low of $13.79, and it went all the way up to $20.66 in the first 7 months of the year. Now that's $6.87 rise, which is 49.8%. So you're just shy of a 50% gain in silver in 6 months. Now that's a pretty strong rally by anybody's mark. And if we switch that over to gold, let's see what we have. Okay, so the lows in the gold were around 1060. We go back a tiny bit earlier into the late December. Yep, so the lows here around about 1060. The highs up here were around about the 1367 mark. So that's $307 gain, and that was 28.9%. So you're looking at a 30% rise in the price of gold, a 50% rise in the price of silver. So I know people were saying this is a fake rally, but it was very, very strong, very, very strong. Now what I want you to look at really is, where is the fake looking data on this chart? Most of this looks like the regular ebb and flow of buying and selling that you see in the market day after day, week after week. But look over here on the right hand side. As gold starts to come down, what do we see? It's a straight line. Now, how often have you ever seen a chart like that on a trading platform? I would say I've been looking at charts for years and years, and I've never seen anything quite like that. Usually you get this kind of 3 or 4 wave decline, then a rally, then maybe a pullback and so on, but this is just a straight down line, and this looks like more deliberate manipulation than anything that was on the upside. So was the rally fake? Well, silver was definitely participating, had a 50% gain compared to gold's 30% gain, but what's definitely fake is this sell-off. So people who are looking at it scratching their heads wondering, why is gold selling off? Well, gold is selling off because people are manipulating the price down. Nothing fundamental has changed since Trump became president. He didn't magically pay off the US debt. In fact, perhaps people are starting to realize the only way it is going to be paid off is through inflation. If you look at some of the expansion of the monetary system, then you see that in order for silver and gold to be fair valued, they'd have to go up 4 or 5 times from where they were back at the start of the financial crisis. So we should be seeing gold fair valued at at least $5,000 an ounce. So yes, this rally may have been premature. This sell-off is definitely fake. It means there's still further to go. So what's the aim here? Silver and gold are what they call hostage markets. They're hostage to the power of central bankers. They like to encourage and reward people for buying assets they approve of, namely stocks, and they like to punish and discourage people from buying assets they disapprove of, precious metals. There's no greater punishment than to hit somebody in their wallet. So if you reward people for buying stocks, and you punish people for buying precious metals, you just reinforce whatever behavior it is you want to reinforce. Why bring them back down for the Q3 and Q4 of 2016? I think it's actually pretty obvious. They want to make sure that at year end they are back where they started. Then all the media and all the pundits will look at the figures for gold and silver for the year and go, nah, so year, maybe up a little bit, mostly flat. Look at stocks. Stocks were much, much better. You should invest in stocks. That's what they're going to say. Will stocks maintain their all-time highs? Well, we'll have to wait into the new year and see. Okay, so what happens next? Well, between Christmas and New Year, you can often find opportunities to buy. The prices do tend to get smacked down occasionally just because of the thinness of the markets and the lack of people trading. Seasonally, if you look at February, it is the second strongest month for price rises after September. January and February combined usually give you a price rise of on average about 5% in gold. These are times that you want to be buying ahead of if you're investing. So, if you're looking to invest, look to late December, early January. Don't leave it too late. We wish you all a Merry Christmas and a Happy New Year, and we'll see you in a few weeks' time. Thanks for watching. Goodbye.